In this video, I'm going to show you how I made $3,717 today, day trading in the stock market for just under 11 minutes. And let's start with the proof. As you can see right over here is my brokerage account on Webull. That is the broker that I use. It is a regulated broker. And you can see it says my realized profit for the day is plus $3,717.38. And up here you can see today is Monday, January 26th. And it is 4:01 p.m. Now, just some quick context, because you probably already noticed that I'm not in my usual setup. I'm not even in my office today. I'm out here in the living room because my wife and I are in the middle of moving. We're moving from Brickell, downtown Miami, up to Boca Raton. So yes, I'm officially going from city life to suburb life. And we bought a house up there in Boca, thank God. And right now, everything is in boxes, chaos. And obviously, you can see behind me, we don't have any furniture in the apartment anymore. And that's the whole point, right? Even with life happening, even while moving, I can still sit down for a short window of time, follow a simple set of rules, and pull income out of the market. And in this video, you're going to see the exact trade that I took, what I was looking at on the chart, and the decision process that I follow every single day so that you can start spotting the same type of opportunity as well. Now, quick disclaimer so that we're on the same page. This, of course, is for education only, and trading involves risk. Losses can happen, and I can't and won't promise you any sort of results. But what I can do is show you a real example of how this works when it's done with structure. So if we haven't met yet, my name is Andy Antiles, and I've been earning a full-time income from trading for the last 6 years. And over the past few years, I've been teaching normal, everyday people, not Wall Street guys, not finance professionals, regular people with busy lives, how to build an extra stream of reliable income from the stock market completely part-time. And here's one of the biggest reasons why trading is so attractive and so practical for working professionals, okay? Most income online opportunities look good on the surface, but they secretly require you to master 9 different skills just to make them work. You have to learn marketing, you have to learn sales, you have to learn customer success and fulfillment and operations and content and ads, tech, systems, and hiring, right? And the next thing you know, the side income you were looking for becomes a second full-time job at best. Trading is different. With trading, you're not juggling 9 different departments. You're mastering one skill, one set of rules, one decision process, one framework that you repeat day after day. That's why this works so well part-time. It's not about working harder. It's about getting good at one thing. Now, if you want true over-the-shoulder mentorship from me and my team, here's what to do. Just click the link in the description, fill out the quick application, and schedule a call with someone from my team. On that call, we'll look at where you're at, what your goals are, and whether this is actually a fit for you. If we can help you, we'll tell you exactly how. And if we can't, we'll tell you that too. All right, let's jump into the charts, and I'll show you the exact trade that made me the $3,717. So the first thing that I want to point out here, as you can see, it says SPY in the top left-hand corner of my screen. That is the S&P 500 ETF. The S&P 500 is the largest, most traded stock in the entire US stock market. Why does this matter? Well, I could literally have 15 million people watch this exact YouTube video, copy my exact strategy, and it wouldn't take anything away from me. It would be creating no competition of any sort for me. And this is incredibly unique when you look at all of the different business models out there. The fact that literally millions and millions and millions of people can use the exact same strategy, and it doesn't take anything away from me. Okay, this isn't a penny stock that we're trading. This is literally the most liquid, the most traded stock in the entire stock market. I only trade this one stock. Every single day, I trade this one stock. Lots of people that are looking into getting into the stock market will look at Apple and Amazon and Tesla, and they'll look at different stocks every single day. Okay, the analogy that I like to use is, say that you are a man looking to find your soulmate, looking to find your wife, and you go out with a different woman, you go out on a date with a different woman every night of the week for 10 total weeks, okay? Compare that with going out with one woman every single night for that same 10-week period. In which scenario will you get to know any one given woman better? If you go out with a different woman every single night, or if you go out with one woman every single night and spend hours and hours, day after day, with that same woman. Of course, if you go out with just one woman, you'll get to know her far better than any of the other women that you just spent that one evening with, right? And it's the exact same thing here. If we can spend all of our time and energy and headspace focusing on one stock, we will be able to develop a very profound and strong understanding of how this one stock behaves, how it responds to adversity, how it responds to different circumstances that may happen. What sort of behaviors does it continuously engage itself in, right? So we can really pick up on its personality if we focus all of our time and energy on this one stock, okay? So I'm never having to ask myself, what stock should I trade today? Every single day, it is SPY. And every single day, okay, the market opens at 9:30 a.m. Eastern time. So you can see here on my screen, to the left of where my mouse is right here, it is tan. The color of the background is tan, and that is before the market opens. And then as soon as we go into 9:30, you can see the time is at the very bottom of my screen here. It says Monday, the 26th of January, 9:30. This is when the market opens. And so everything to the right has a white background because we are now in normal trading hours. From 9:30 a.m. to 4 p.m. Eastern time, the market is open. So what I look to do every single day when I sit down at my desk, between 9:30 a.m. and 10 a.m. Eastern, roughly, sometimes it takes 10:05, 10:10, 10:15 a.m., I wait for a clearly defined range to form, okay? What a clearly defined range means, it is comprised of two things, okay? A level of resistance and a level of support. So when the market opens here, price goes up and up and up and up. And I should mention that each and every one of these candlesticks that we're looking at represents 5 minutes of time. You can see right here, it says 5M, meaning each and every one of these candlesticks represents 5 minutes in time. So from 9:30 to 9:35, price went from here all the way up to here. Then from 9:35 to 9:40, price went from here to here, from here to here. So we're just having a straight line up. But here for the very first time at the 9:45 candle, between 9:45 and 9:50, SPY, the S&P 500 ETF, the one stock that we trade, was unable to break above 692.39, right? We can see that the thin part of the candle, which represents at some point within these 5 minutes, the price did go all the way up here, but by the time that it closed, by the end of the 5 minutes, it was all the way back down here. So it was unable to close above 692.39. Now, if that were just the one candle, it wouldn't be significant. But notice what happens. We have 3 consecutive candles, 1, 2, 3, that fail to close above 692.39, right? Each of them have a wick, the thin part of the candle, that goes well above 692.39, but fails to get a 5-minute candle close. And so I've now noted this as my resistance, right? This right here becomes my resistance, and let's see what is the best way to note this. Ooh, my mouse is glitching here. Let's just call it resistance right here. And so this is my resistance level, right? I've noticed 1, 2, 3 consecutive candles in a row have been unable to break above 692.39, right? Resistance. That's what resistance means, a continuous inability to close above a particular level of price. So I have one out of the 2 things that I need in order to establish my clearly defined range. The second thing that I need is support, right? So as I'm watching how this is playing out, ultimately, I'm able to determine that we have a continuous inability to close below 691.97, right? We're sort of oscillating between these 2 levels of price. And so that's exactly what we get right here. And we can note it as, again, I'm glitching a little bit here, support. And so we have our resistance and we have our support. And that, ladies and gentlemen, creates our clearly defined range. And I would love to be able, there we go. This purple rectangle, this purple square that we have here, notes our clearly defined range. The clearly defined range is made of support and resistance. And at this point, all we are waiting for, okay, is for a candle to either close above resistance, either close above 692.39, in which case we are getting confirmation. We are finally being told that SPY is ready to continue to trade in this region of price, right? Because look at here, here, and here. Each of the times, and here as well, this candle right here as well, each of the times that we tested 692.39, we failed to get a close for at the end of the 5 minutes to be above 692.39. So either a firm 5-minute candle close above 692.39 would tell us that SPY is going to continue to trade higher, or a 5-minute candle close below support, wherein we would be told that SPY is ready to continue to trade lower. So we have no bias whatsoever, right? We are completely waiting patiently, waiting for price to tell us if it wants to go up or if it wants to go down. And all that we need in order to be told is a firm candle in either direction. And right here at the 10:10 candle, which means at the end of those 5 minutes, it was 10:15. At 10:15 a.m. Eastern time today, Monday, January 26th, we were told that SPY is ready to continue to trade higher. And so I bought option calls. So I trade options on SPY. Options are an instrument that allows you to control a much more substantial amount of capital by not having to put all of that capital down. So it is an inherently leveraged instrument that allows you to capture very significant profits, even though SPY, it's not like SPY moved, even 1% on this move, but I was ultimately able to capture, right around a 23% move on my contracts, the option contracts that I purchased. So I bought calls, right? As just a very basic explanation, calls are an asset that increase in value as the underlying stock, in this case SPY, goes higher. So if SPY goes higher, calls go higher. If I were to make the bet that SPY is going to continue to trade down, so if I got a 5-minute candle close below 691.97, I would purchase puts. And puts are an asset that increase in value as SPY trades down. Okay. So once again, everything that I'm looking at, anytime I'm looking to gain conviction for entry, it is based on the 5-minute chart. It is based on these 5-minute candles. We wait for a clearly defined range to form itself. The clearly defined range is presented to us once we have a clear level of resistance and a clear level of support. And then we simply wait for a firm 5-minute candle close above resistance or below support. And we take our entry. We take our trade, and in this case, I was able to earn $3,717 on this move to the upside. In another video, I break down the exact risk management system that I use in every single trade, and maybe I'll actually make a more detailed video on that a little bit later this week. But notice that I don't predict where price is going, right? I don't just ask myself as I head into the day, where do I think price is going to go today, right? I wait for price to tell me, right? I am reacting to this 5-minute candle close above resistance, and I take my calls. So that's the breakdown. And the reason why I wanted to make this video isn't to impress you with a single trade. It's to show you the difference between random trading and structured trading, right? Random trading is clicking buttons and hoping, whereas structured trading is having a simple framework, repeating it, and letting consistency do the heavy lifting. And if you're watching this thinking, okay, I get it, but I want help learning this the right way, that's exactly what I do. So again, if you want true over-the-shoulder mentorship, click that link in the description, fill out the quick application, and schedule a call with my team. We'll walk you through the system, the risk management, what it looks like to learn this step by step, and whether it fits your goals and your schedule. And if you got value from this video, subscribe to the channel and like the video as well, because I'm going to keep posting real breakdowns like this so that you can see how it works in real life. All right, I'll see you in the next video.